Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 6, 2023. It is 2:57 p.m. Eastern Time. So I'm starting the video, so we have about an hour to go in the trading day. And I'm starting it now for two reasons. Number one, first and foremost, I want to get it out to you before the close. But second, we only have a few minutes left until these candles, the current 60-minute candles, are finalized. And remember, this is where my focus has largely been lately on these 60-minute charts, particularly the sideways, what I call Christmas trading ranges, mid-December up and through now. So, barring a huge reversal in the next 2 minutes, just as I said that, the clock tick 258, we'd have to come all the way back down here in below to fail that breakout. So it looks pretty good. I would very good odds, and said before, I expected a breakout today, and we broke out pretty impulsively, and you can see the buyer stepped in there. Here you can look at the 1-minute chart. Once that level is taken out, it's been pretty strong buying. So I did want to just again, before the weekend, before the day is over and we head into the weekend, confirm that we do have those breakouts. It's a pretty powerful buy signal. This time nothing's changed. I figure we get a move up at least around that 280 level. I have the resistance levels. First one, the number's not marked. It's just these two previous reaction highs right there. That's where I think we get the first pullback today. So I've got a pretty hefty day trade, oversized position. I'm going to sell just shy of that, and I'll show you some levels on NQ in a minute. And now here's the thing. So as long as this breakout holds today, because I'm doing the video, it's Friday, of course, you have 2 extra days of overnight risk. Even if you're a futures trader like I am, that's the one time where it gives me a little pause, because futures stop trading Friday, evening or afternoon after the market closes, and they don't reopen till Sunday night. So that's the only time a futures trader has to worry about overnight risk, any big geopolitical event, or a fund or bank blowing up or anything like that, which could send the futures shooting down over the weekend. But with that being said, it looks good. Let's just leave it at that. Now, that's what I say. Sometimes don't overcomplicate things. It's a breakout. It's a buy signal. So that was my add-on point, and I have as much as I want to have right now for intraday, and then before the close today I'll make sure I have as much, but not too much, that I want to take home for the weekend. But I'm fully long after I said closed out my swing shorts here the other day, just because the rally looked pretty likely, and so I'm fully long across all accounts at this point in time. QQQ is not the only one, obviously. You need to see SPY get taken out, and there it is. So that the candle, as I've been talking, we just hit 3 p.m. So now that the 3 p.m. candle's finalized, and that's a solid. That's what when I always say, a solid break. That's what you want to see. So breakout's a breakout unless fails. So let's talk about that. So if it fails, it's not unusual when you break out to back test a level. You can also see some levels marked on SPY that are likely to come in as reaction points if and when we get there. And ultimately, I think we can probably carry up to about that 401 level on SPY, and the downtrend line there, you're talking about maybe 4% from the breakout point. And again, those are just initial kind of near-term targets. It could morph into more. Let's see what happens next week. I'm not getting too excited. This is the bear market. Trust a bear market about as far as I can throw it, or I should say alongside trades in a bear market as far as I can throw them. But that's where we're at. So it looks good. I just wanted to say check, check, check. Check on QQQ, check on SPY, and check on IWM. There's IWM clearly out of the trading range. First resistance level target slash about 179. And we could carry, depending on what the other indexes do, maybe all the way up here to 189. But again, we'll pick that up next week. I'm not even focused on, for the swing positions, I'm not even focused on where to sell right now, unless I want to stop out because all these breakouts fail. And so that's what to look for. If something crazy happens in the last hour trading, or next week, a solid move back down into the trading, not a little. We could back test and allow a little bit of a dip, but anything much more than a little bit of a dip, meaning all the way back to the midpoint or below, that's going to be a failed breakout, and that's not good. All right, let me look at the futures for you. The big ones that I trade are NQ. There's that 1179. Gosh, this goes all the way back to today. Lots happened in one day. That's why I said earlier in the video, it's a day you might want to be in front of the computer trading if if that's your thing. So we started out this morning with the bullish falling wedge, which broke out in the morning with the economic data, popped right into resistance, pulled back, and then I highlighted there as a objective long entry on the back test. And I showed 2 arrow breaks. I had one here, first stop, we hit that, and then took that out, and then the next one going up there, and of course that's the 11. Oh, this is the top of the trading range on QQQ right here. So that's that breakout. That's just a 10-minute chart. So then you go to the 60-minute chart for longer term stuff. I'll go to 1 month. Let me see. I have a different board here. This is the one I like. All right, this is the comparable level to the top of the trading range in QQQ right there. This is NQ NASDAQ 100 futures. That's what we were just looking at. 11,045, give or take. Nice level, and again defines the recent trading range in NQ. There's a breakout. We are coming up on T1. That's why I expect the first reaction to come there. That's a level because you have resistance, 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 support. But whether we pull back or not, like I said, I'm swing positions. I'm going to hold out for at least into next week, and I think we can get some more upside going, maybe all the way up there, that T5. That'd be a nice move if so. But first things first, let's see what happens when we get here. What else do I have for you? ES, the S&P 500 futures. I am looking. I've got them down here somewhere. There it is. And that was the comparable level right there for the top of the trading range in ES, which is the S&P 500 futures. There's your range. SPY had continued to make higher lows, which is bullish in itself. So really, if you look at it this way too, there's a pattern in trading called an ascending triangle pattern, which is inherently bullish. You have a flat line there, and then an upward sloping trend line there, and there's your breakout, and there's your first resistance right there. Really nice resistance level. If you're an ES trader and you're an active trader, I put very good odds. If you get there, that'll be a good point to reverse, game a quick pullback, and then get back in long again. Okay, I won't spend much more time. I'll hit some other things here, but I just wanted to, because I know we're getting very close at first. There it is. So we're right at that first resistance level, likely pullback target. And let me pause the video, make sure that should be getting filled right around here. Okay, all right. So, and that's just reverse. I just want to game a little bit of a pullback here. If they just blast on through there, then I'll just take my licks and get back in, or wait for, if we pop it, we'll probably come and back test it. I don't think we're going to go straight through there without, we're up already right now 3%, but I can see today being a 4 or 5% day, potentially with the power of the coiled spring, the trading range. But let's see if we can get a little pullback. I'll revisit that at the end of the video. I'm not going to cover a lot more. Just go over those individual trade ideas. Good time to be a stock picker. Good year, 2022 certainly was, and an active swing trader. It's been years since we had a really conducive market. It's been a buy and hold market because of the Fed refusing, to allow any recessions or corrections. Just a steady grind up. Don't get me wrong. We've had some pretty healthy corrections in the last 10 years, but really since COVID, it was full throttle up from excessive stimulus, and 2022 turned out to be a great year for swing traders. Alrighty, the ideas that I really like were that MKTX, that one's running good today, up about 5.6%, still going, still only about halfway to my first target, so plenty of meat left on that bone. Bitcoin, this is the one, if you want to, I guess what's going to be the strongest next week, if this breakout sticks and we hit those additional targets I have, crypto should rock. I think it's going to be it's a risk on asset, and it's been a risk off market. So with stocks breaking out, and Bitcoin hasn't got the message, Ethereum's been running. And so, I think you can have both. I gave you my targets in the earlier video, but I think Bitcoin's probably going to play a little bit of a game of catch up here soon. So I'm a little overweight that relative, but I'm not going anything too heavy until next week. I took starters in those today, just before that other video where I highlighted them for you, and I'll wait and see. Again, don't get too excited in a bear market. The weekend's coming up. We can always pick things up on Monday. So there's Ethereum, and I already covered the cryptos themselves, and the old ETCG has been running too. That's the original Bitcoin, or I'm sorry, Ethereum uh, trust. And that one just in the last 4 days, the thing's up 81%. So they're stepping in and buying, and just like ETHE, they have these downtrend lines that were taken out. And all right, let me move on. I'll just talk on the other things real quick. Natural gas still looks poised to go. Hasn't rocked yet. Hesta told it needs to take out that 380ish level right there, 381. Punched through it but couldn't hold it even on a, this is just that shorter term 10-minute chart. So you can see there each of those, see the white parts, that means the candles, and we never had a confirming buy signal. The bodies, the fat parts where it closes, and you can see rejection, rejection, rejection. Those are just intra-period wicks pop. And so again, I maintain what I said earlier, it needs to take out 381, should run up there to the next target. Still looks good on the longer term charts. 60-minute chart, there's that nice clean downtrend line. So if and when that goes, should be a quick swoon up to the 3 targets I gave you there. So, and again, it's one of many trades. Put all your eggs in one basket, diversify among asset classes. I mentioned gold and silver yesterday, having gold not yet having broken down, although silver did. So that's why I said, might want to hold off on shorting silver because of that. Gold is up today because, like I said, my biggest thing was the US dollar index. I could see one more thrust down. We hit that 12,848 support right there, but we've been, just like the stock market, kind of consolidating. And like I said, the one thing, it is divergence in the purest form with higher highs on the indicator, but see how these lines haven't crossed? The divergence I like to see is when you have put in a higher trough down there. When the crossover happens, then you move up and you go down, put in a higher low or trough, and you make another bullish crossover. And so that's probably what we're going to see. And so therefore, gold's rallying. And the silver, I told you, did break down on the 60-minute. But as I said, with the fat gold didn't break down, you probably could see a back test. And that looks like we're up today. So that would be, and then once we do get that, if we do get that one more thrust down and the dollar index to that trend line, and then we get some, either that or even especially good evidence or reversal, that's when you might want to short the metals for a pullback trade and then get back in long. But again, long-term investor, swing trend trader, don't try to game these little 60-minute charts. The daily charts and the weekly are still strong and saying be strong and bullish, or strong and long the metals and the miners. That's really about it. The other, throughout a couple, several trade ideas. Disney, kind of a steady Eddie, lower risk one. You want a little more juice. And Zoom should really has the potential to explode. Here's that 5-minute bull flag I showed you earlier today, and so we broke out of it. But then the markets hadn't yet broken out, but the markets now have broken out. This isn't. It's not textbook bull flag action, because the slope of that line's a little, obviously not as steep as this one, but so either way. But remember, now we just hit, and I'll revisit here and I'll end it here. We just hit, where I just reversed that resistance level, 170, 173.15, and let's see if we can get a little bit of a pullback there. And always, like I said, always sell a little shy of the actual resistance level, because that's all eyes are going to be on, let's say 11,173. Sellers may step in. Then we may make a full tag. We could even punch right through it. But I'm not going for a full pullback of the dip back down to 11,044. If we get there, that would be a great level to add on with a stop somewhat below. That would be a back test of the breakout of the range. But due to the nature of this, again, the energy built here, I think this is the beginning of a short squeeze, short covering rally. I think there were just a little bit too many bears in the, heading into the new year, and which is one reason that I flip-flopped from, my longer term, or long-term swing accounts, swing positions from bearish to bullish. And I'm ready to flip back on a dime if the market tells me to. Like I said yesterday, just follow the charts. Forget about all this fundamental noise. The headlines are going to get bearish and show you this and that, and layoffs and bankruptcies here and there, left and right lately. And yeah, that does have an impact on the economy. And it does impact where the market's ultimately going to be headed, which is still, in my opinion, lower. But let's just see where we go today and into next week. All right, let me get this wrapped up. It's 3:13. So 15-minute video. I'll get it out to you. You'll have it before the close. And again, unless something changes, the only thing that can change for me now is a move back down much below the top of those trading range. So 11,044 on NQ and whatever those other levels were on SPY and QQQ. Right there, about 267 on QQQ. And remember, this is the first resistance level on QQQ as well. You have the gap, that reaction high. So just my little world of micro trading. Odds favor at least a little profit taking here, and then I think they'll ramp it up to close green, maybe there, or maybe even above that level by the end of the day. And that's only 45 minutes from now. All right, this has been Randy Finney with the right side of the chart. Have a great weekend.